Now, before we get to those questions, Trish, I mean, China's forex reserves just out. Market reacting or not?
Well, it's more of what's the implication for that, and definitely the treasuries will be reacting because the number is, I mean, it was stronger than expected. It was 2.1 trillion, and it means that the second quarter China reserves actually rose 178 billion compared to the first quarter where it just rose about 7.7 billion. So it means that it was pretty consistent with the very strong foreign central bank demand that we saw in U.S. Treasury auctions. Everyone's wondering why. Everyone was actually initially concerned about the record-sized Treasury auctions, and yet we continue to see very strong demand from foreign central banks, and this just simply confirms it. So it goes to show that despite China's continued push for an alternative source of to where to invest its reserves, it will have to probably continue to buy U.S. Treasuries. This probably spells a pretty encouraging news for U.S. Treasuries.
Not time yet for the yuan to be an alternative. But as far as the yuan is concerned, I mean, what are traders saying about its value?
Well, the value, the NDR market is just pricing a 0.4% appreciation. In fact, it's even lower than where it was before. A month ago, they were still looking at about 1.6%. They're saying that anything, China is really unlikely to budge on the yuan. Any monetary tightening. I mean, there are talks about monetary tightening now, given their concerns about we have there's money supply growth numbers this morning, and it was like faster than expected. So they are trying to rein in loans growth. And so, but they'll do it on the monetary side, interest rate side, rather than on the currency side. So traders are not really expecting very much on the yuan itself. But they do, having said that, they do expect that China will continue to embark on this so-called liberalization, bilateral trade agreements with its counterparty trades, to trade in the yuan, because that's ultimately what China's objective is to make the yuan a fully convertible currency.
And talking about rates, BOJ, BOT will be meeting this week, but rates far from their minds.
Yeah, far from their minds. Traders will be looking at how these central banks come up to, first of all, indicate the state of their domestic economy. That's for sure, because in BOJ, in the last two sessions, the Japanese central bank actually revised upwards their forecast for the Japanese economy. So they're wondering whether they're going to do the same this time around. Of course, they'll also be looking to see whether BOJ extends their credit facility programs for the corporate sector. Now this facility is not due yet till September, but they say that Bank of Japan may want to give an early signal that it has no plans yet to roll back quantitative easing. Now, if they do, increase the outlook for Japanese economy, this will be very good for risk appetite. Traders are already hearing a lot more, yen carry trades back in action. In fact, Mrs. Watanabe, we heard about that they are buying a lot more of Aussie yen and Kiwi yen trades these days.
Okay, we have a couple of questions here from our viewer. Tony wants to know if there will be a correction for the Aussie and the yen. And as far as the Aussie is concerned, the Aussie and the Kiwi, they're both trading near a one-week high. Yeah, and that's because of the reports out of the U.S.
That's right. Both of them, actually, it was very clear the Australian and the Kiwi dollar surged against the yen, and the yen took quite a beating. Again, it was a lot of carry trades, like I was mentioning earlier. And according to the traders I'm speaking to, they really don't think that the correction will come anytime in the next 24 to 48 hours anyway. There's a lot more margin trading going on as well in Japan for these high-yielding currencies. Seems that the whole thing just picked up in the last 1 week or so.
Yeah. Aussie at 79.30 right now.
Well, NAB actually looking for 79.20 to 80 cents in the next couple of days. NAB actually, by the way, National Australia Bank actually changed its forecast for RBA to keep interest rates unchanged for the rest of the year. It was actually initially forecasting still a 25 basis point cut, but now it's actually taken that back. It expects the RBA to keep interest rates at 3% for the rest of the year till September next year. So this is another supportive for the Australian dollar as well.
Okay, looking good. Thanks, Trish.